Let's turn to India now, where the Reserve Bank announced a major move today. It has decided to cut interest rates to boost growth. And that too for the first time in 5 years. The decision was announced by Governor Sanjay Malhotra. He took charge in mid-December. So this was his first policy announcement. Most experts were expecting a 25 basis points cut, and that's what the RBI, or India Central Bank, delivered. They have reduced lending rates from 6.5% to 6.25%. But the RBI governor also had a warning. Global headwinds are worsening.
Accordingly, the MPC decided to reduce the policy rate, by 25 basis points to 6.25%. At the same time, the MPC felt that excessive volatility in global financial markets and continued uncertainties about global trade policies, coupled with adverse weather events, pose risks to the growth and inflation outlook.
This rate cut comes after a long time. The last one was in May 2020. After that, we had lockdowns, rising inflation and a GDP slowdown. So the RBI was pretty cautious. They kept the interest rate steady since 2023. Then why the cut now? And how will it impact your loans? Let's look at the impact first. The RBI has cut the repo rate today. The repo rate is the rate at which they, the RBI, lend to commercial banks. Lower repo rate equals cheaper loans for banks, and cheaper loans for banks equals cheaper loans for you. That is the chain reaction. And this is good news for new buyers. If you're looking for a home loan, now could be the time, because the EMI rates will be dropping. Let me explain that. Say you're taking a loan worth 50 lakh rupees. The repayment time is 30 years. Let's assume the old interest rate was 8.75%. Then your EMI was 39,335 rupees. That's how much you had to pay every month. Now cut 25 basis points from this rate. Your new interest rate will be 8.5%, and your new EMI will be 38,446 rupees. That's a drop of 2.2%, although not everyone will get this relief. Your loan must have a floating interest rate. If it does, you have two options. You can either pay lower EMIs per month, or you can reduce the tenure of the loan. Meaning you pay the same EMI but for fewer months, not the full 30-year period. A lot of experts say that the second option is better. It is better to cut the loan tenure. But do consult with your financial advisor before you take the call. Which brings us to the final question. Why the rate cut now? To combat the economic slowdown. India's recent GDP numbers have failed to impress. In the second quarter of this year, growth was just 5.4%. The year before, it was 8.1%. Overall, this year's growth is projected to be 6.4%, again down from 8.2% last year. A big reason for this is household consumption. Simply put, Indians are not spending enough, and the goal is to change that. And we saw that in the union budget last week as well. The government gave tax relief to the middle class. Income up to 12 lakh rupees is now tax-free. The aim is to put more money in people's pockets. The RBI rate cut has a similar goal. If you reduce interest rates, loans become cheaper. And if loans become cheaper, you're more likely to take one. And more loans equals more spending. That's what the RBI is hoping for. But of course, there's an obvious risk. More spending also leads to rising prices. In other words, inflation. And the RBI is aware of this problem, which is why the governor maintained his neutral stance.
The MPC also decided unanimously again to continue with the neutral stance and remain unambiguously focused on a durable alignment of inflation with the target while supporting growth.
Neutral stance is basically wait and watch. The bank will not commit to any future courses of action, the Central Bank of India. Neither rate cuts nor rate increases. They want to see how things play out before they decide. And the markets also had a muted reaction today. Normally, they cheer rate cuts, but the Sensex dropped almost 200 points today. One reason is because the markets anticipated these cuts, so the change was already accounted for. Another reason is global headwinds. With President Donald Trump in the White House, nothing is certain. He's imposing tariffs on allies and neighbors, so India cannot rest easy. These are certainly challenging times to lead a central bank, especially in a major economy like India. By cutting interest rates, the Reserve Bank has sent a bold message. Let's see what happens next. We're calling the show Vantage. We hope you like what we've put together for you. Touted as the minimum defense from that video. India's neighbors were the first to send the special edition of Vantage live from the White House throughout this week. Yes, Hindu Mandir we're on our way to Tel Aviv. Pretty measure, but it's also the perfect way to drive.
I don't think that
Prime Minister of Bhutan, Sherin Tagwe. Welcome to
60% of the world's
office. Prime Minister Modi did the iron.
We were actually
How are you doing? How do you like? It's been 1 year since that meeting. Iron bars separate you from the outside. Out the vote effort. Trump had, it says, and at $4.3 trillion. 4.3 300 billion by 2030. That's what we need to tackle climate change.